Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, December 14th, 2020. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar having a counter trend bounce of 0.3% last week, mainly due to the strong inverse correlation that are dominating the flow of the market. The SPY currently have a minus 0.90 15-day correlation to the US dollar. We have the euro versus the US dollar barely correcting minus 0.1% on the week and remain bullish on both a 15-day as well as a 90-day trend duration. You had the Japanese yen up plus 0.2% versus the US dollar last week and remains bullish in both a 15-day as well as in a 90-day trend duration. And you had the British pound versus the US dollar present a buying opportunity last week, down minus 1.6% and remain bullish in both a 15-day as well as in a 90-day trend duration. And if you look at markets in countries that are commodity correlating, such as the Canadian dollar and the Russian ruble, they continue to appreciate versus the US dollar. You had the Canadian dollar up another 0.1% last week to plus 2.3% in the last month alone. It continues to signal bullish in both a 90-day trend duration. And then you had the Russian ruble appreciate plus 1.5% versus the US dollar last week, taking its 1 month gain to 5.5% in the last month, also continuing to signal bullish trend as well. Which takes us now to commodities. Commodity inflation continues to proliferate as you have the CRB index inflate another 0.8% to a new cycle high for inflation. And you have oil inflating 0.7% last week to plus 11.6% in the last month. Copper inflating 0.1% last week to plus 12.3% in the last month. And if you take a look at something like coffee, that continues to inflate 3.4% last week to 8.6% last month. And lumber inflating 17.2% last week to 38.9% in the last month alone. In terms of other cross asset classes, inflation continues to accelerate in terms of energy stocks. Those were up 1.2% last week and up now 21% in the last month. And again, in relation to commodity-oriented countries like Russia, Russian stocks, they were up another 4.1% last week to plus 14.5% in the last month alone. And if you want to continue to broaden your emerging market exposure, you take a look at emerging markets. Those were up another 0.5% last week to plus 6.7% in the last month alone. India as well had a strong week, up plus 1.9% to 6.2% in the last month alone. So on a last note here, taking a look at the 10-year yield, linear econs aren't seen in their headline CPI yet, but clearly commodities and gold, which is down another 1% here today, which again is the most consequential factor of determining future price action, are real yields. The bond market does, with the 10-year yield making another higher low for the cycle last week, and you have the yield curve now steepening to plus 80 basis points on the 10-2s this morning. So with the 10-year yield coming back to the low end of its range here at about 89 basis points, you want to continue to fade that with a move higher, closer to about 1%. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.